Banks are now starting to definitely realize that partnering with others, whether it is an NBFC or a fintech, is the wave of the future here, and they have to coexist with them, which is actually exciting for fintechs. But as investors in several other fintechs, also one of the things we've always found is the business teams are happy to partner with the startups, but then the ability to onboard the startup and actually go live is often a huge barrier. And very even some of the more advanced NBFCs, very few of them have really state of the art new age APIs and stuff like that. So I'm guessing, and please feel free to correct or elaborate from what you're saying. Your solution goes in there and enables the banks to be much more nimble and much more ready to onboard new fintechs, onboard new NBFCs, and work with them in thing. Maybe you can dive in a little bit more, because many of our audience are actually fintechs who might be the beneficiaries of your platform as well. So maybe with a few anecdotal examples of some of the things that they have to do, which are challenging in today's environment, and how with your infrastructure in place, they become a lot more doable.
Sure. So as you mentioned, so primarily we are positioned as the infrastructure player, and we are building the use cases on top of the infrastructure. So the core infrastructure is where we something called as the universal core banking adapter, which we have built, which sits on top of the core banking solutions of the banks. We have already deeply integrated with Finacle. We are already live with a couple of banks. We are already under the implementation with deep integration with TCS banks, also with Oracle FlexCube. The all three put together, we practically cover nearly all of the large banks where we are out-of-box compatible. Now, this starts to bring in very interesting synergies between the fintechs, NBFCs, and the banks who both want to work together. And we can, from a business side, I think everybody agree, and we can again speak at length that why there is a business case that they want to do business together. But I'm talking primarily from a product and infrastructure perspective, that what were the key challenges they were facing, right? So, they have two options. Either they do a point-to-point or a one-to-one direct integration, which is by definition inefficient. There is a lot of resources to be put in. The GTM becomes 6, 9 months, sometimes even 12 months for a fintech to do a direct integration with a bank. It's again inefficient, takes more time, more resources, more cost. At the same time, for a fintech, if they're doing integration with one bank, it is not reusable. If they have to do that integration with other bank, they have to do the exercise again. And these integrations could be agnostic to use cases. The use case could be lending, co-lending. The use case could be for a neobank where they are sourcing for CASA, FD, or a use case could be for even credit cards. For different use cases, at the end of the day, they have to interface with the core banking systems of the bank. From a bank's perspective, banks are not willing, from a security perspective also, that they will not be able to open their core banking systems to the whole world. And I think all of us understand these CBS systems are kind of held into a very secured way. They're sitting inside the MZ zone where there is no access to internet or even the kind of direct line. Even the bank users can't access it. So so there is a lot of security layers have to be built in. Then there is the VAPT and all those kinds of vetting security checks have to happen before bank attests some system to communicate to them. These are the natural friction points into the overall system. How we are kind of positioning ourselves is kind of building that infrastructure layer, building that infrastructure fabric, which is on one hand connecting and having a deep integration with those banks, and on the other hand doing those integrations with the NBFCs and fintechs. So without actually replacing a core infrastructure, the thick systems inside the bank, we are building those thin layers on top of the existing infrastructure, which suddenly and magically becomes compatible to do business with all the fintechs and NBFCs, which is much more secure, much more efficient, can be reused hundreds of times. Bank has an incentive as they get integrated, they can do business with hundreds of NBFCs, and NBFCs have the fintechs, and they have the incentive that if they get integrated with us, they can actually do business with some of the biggest lenders. As a matter of fact, as we speak today,
go ahead.
Yeah. So if we speak today in terms of the ecosystem enabler, the kind of large banks, both public and private sector, even if I exclude the certain pipeline that we have, the signed contracts, the signed banks, and the signed NBFCs, they together control approximately 32 lakh crores in assets, which is more than a quarter of the overall banking. So, so we are able to create that network, and we're able to build that network of the fintechs and NBFC, where there is a lot of value to which can be unleashed over a period of time.